Are you frustrated with your tax preparer because she seems to be saying one thing and you're saying another? Let's talk about why definitions really matter in this video. Hey there, I am Alison Eddings. I'm a CPA in private tax practice, and I wanted to chat with you today a little bit about definitions and what certain terms are, what they mean, and what some commonly misunderstood terms are. Because I'll admit, I know it gets confusing for my clients sometimes because they ask me what their return will be. What will my return be? What will my return be? And I cannot tell them that because that's not the question they want answered. They want to know what their refund will be, and that is not the return. So when you look, if you're an individual taxpayer, you complete, for the most part, a 1040 individual income tax return. And if you're as old as me, you might know why it's called a return. Back in the day, before the internet, before email, before... Gosh, I don't know. I grew up in a small town, so we didn't even have this stuff at the library, I don't think. The IRS would mail out to you the forms that you used in the previous year and the instructions for those forms in a little packet, and on the back it had the label, like a peel and stick label. So you would peel this label off and you'd affix it to your return so that when you return it, it has I don't know why they would use if you even had to necessarily use that peel and stick thing, but it was there so that you could use the peel and stick. And if you needed more forms, it was in the back of this. It was even lighter than newsprint. And they still publish them. They just don't mail them out without you asking for them first. Because I get them every year for different things. Like if I order, when I used to have to paper file 1099s, they would send the instructions with it, even though I would much prefer to look them up on the internet for anything. But they still send them. But in the back, it would have like, call this number if you need forms. And it would walk you through this prompt to press in a button if you need more copies of this or more copies of that. And they'd mail it to you. And the reason it's called a return is because you return it to the IRS. Now your refund, that's how much you get back. And this common misnomer makes me insane. And just about every tax preparer out there makes them crazy because we even see it in the press. The press perpetuates this misnomer and they talk about your tax return in place of your refund. And that is so incorrect. And it just makes my blood boil. And I would share on social media when I would find an article, especially if it was done by a more professional organization, like, a really high-end mainstream media that has an editorial department, because tax code is hard, y'all. It is hard and confusing. And if they were writing about capital gains and they would get things wrong, and I'm like, no, I just want to redline it. And in this day and age where, news outlets aren't making as much money and they have to get rid of editorial staff and reporters just report without somebody checking it, it makes me a little insane because it's hard, y'all. This is hard for you guys. You don't need to be confused further by the media. And I know they're not doing it on purpose, but it's just confusing. So it would help if we all spoke the same language. So that's the first one, refund versus return. And while we're talking about a refund versus a return, I want to clarify that your balance due, for the most part, is not your total tax. No, not at all. Now, let's say you were self-employed and you made no estimated taxes during the year. Then yeah, your balance due might equal your total tax. But for the most part, if you are a W-2 employee, if you've made estimated tax payments, if you get 1099s and from like retirement distributions, the payee is going to withhold certain amounts so that you have some on deposit. So what you see as your balance due does not equate with your total tax. And the total tax number changes every year on which line it's reported on, because they'll add a line and take away a line and move things around. But for 2020, and there's different forms too, because like there's the 1040 SR and there's, but for the most part, the average taxpayer prepares a 1040. And for 2020, the 1040 on line 24, that shows your total tax number. So let's say your total tax number was $5,000, but you had $4,500 in withholding on your W-2. Well, your balance due is $500. That is not your total tax. That's just your balance due. And it's really simplifying things, not including credits and not including all these other things, but just to simplify things for you so that, and I think I've got a little image there to show you where the total tax number is too, because I'm going to do another video on how to avoid tax penalties. And tax penalties are not based on your balance due. They are based on your total tax number, which, like I said, for 2020 is found on line 24. So I'll do another video this month for you to figure out how to calculate, within reason, your total tax liability for 2021, and make sure you have enough on deposit before the end of the year so you have no penalties. Alrighty, so next topic, I have my little sticky note here. Next topic. W-2 versus 1099. I get this one a lot because I have to ask clients when they come in, do you get paid on W-2 or 1099s? I need to see that. And they're like, oh, here's all my W-2s. And they're 1099s. And if you watched my video from last month, are you a W-2, 1099, and who decides? You know there's a difference between those. And what's the big difference between a W-2 and a 1099? For the most part, a 1099 has no federal withholding on it, or FICA. So you're going to pay a lot more tax because you don't have an employer covering a portion, and you haven't made any deposits already in the year. So big, important distinction between a W-2 and a 1099. Plus, 1099s are also used not just for self-employment. They're used for, like I said previously, retirement income, government payouts like unemployment, or even refunds, things like that. So it really matters, because when you speak to a tax professional about a W-2, what clicks in their mind is, okay, he's W-2, so he can't take a home office expense, he can't do this, he can't do that, but he can do this, 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 and this. And then you give them 1099s, you're like, oh, well, that's a whole different ball of wax. So that's why those definitions matter, whether you're a W-2 or 1099. Some people are both. You might be both. You might have a side hustle and get a 1099 from Uber, but also you work for Bank of America. If they allow that. I don't know. I don't have anybody that does both at a bank, and so I wonder if they just don't even allow that. So yeah, those are some of the big ones I wanted to hit. But AGI, I was really surprised. Gosh, when was it? There was maybe with it wasn't the first stimulus. Maybe it was with its first stimulus payment. A lot of taxpayers did not know what their AGI was. And AGI is not your earnings. AGI is adjusted gross income. It used to be on the bottom of page 1 of the 1040. So any adjustments before you get to that subtotal were called above the line adjustments, and anything below that were called below the line adjustments, because that AGI was the line. But AGI is roughly W-2 income, net self-employment income, which means after your expenses, retirement income, the taxable Social Security, not total Social Security, because currently Social Security is not taxable in total. Biden wants it to be. I mean, who wants this? Biden does. I don't understand why anybody supports taxing retirees any more than they already are, but there you have it. But currently the taxable portion of capital gains, subject to certain limits on capital losses offset, things like that. So the adjustments to adjusted gross income are 1/2 of self-employment, QBI, which is the qualified business income deduction, student loan interest deductions, things like that. So there's little adjustments. So it's not your biggest number, and it's not your smallest number, but it's kind of, it's your roughed up, what IRS would look at as your, like your usable resources, basically, because your taxable income is after taking currently right now about 24,000 in standard deduction. So that's, given for living expenses, supposedly, like, it kind of is supposed to equate to that. So your AGI is not the biggest number, but it's a bigger number than your taxable income. And it's a figure that's used to make a lot of other decisions, like your medical deduction. Your medical deduction is subject to a 7.5% floor. So that's 7.5% times your AGI. Only the amount in excess of that is what you can deduct, but then it's still subject to the limits for your itemized deductions. So that's an example of where AGI is used to make decisions on things for tax purposes. But anyway, so even if this video has just helped you to get a little more familiar with how some terms might be different, you might not be able to use them at a cocktail party, not yet, but you're learning. You know more now than you did before. So I think that's great. And just, just like in learning anything, you got to get some structure underneath it before you put on some meat, before you're able to use these terms, with, I was going to say a cocktail party, but I can't tell you last time I've done something like that. Um, but before you go out and just, have a conversation with somebody about tax issues, but it helps. It helps. The more you hear it, the more you practice it, it helps you understand. And I think that's a great thing. And I think it's wonderful that you're here trying to learn more and take ownership and power back away from, because you know what, when the IRS and the tax preparers are the only people who understand what these words mean, that kind of takes a little power from you. And that's not right. And that's why I am expanding this channel. It used to be just to share information with my clients, but I saw what a great way it was to educate the public. And so I really wanted to just help and share with all American taxpayers so that they can understand better how to take control of their tax situation. So if that's you, and you want to do that, kudos to you. I would appreciate it if you would subscribe, if you would like the video, if you would share the video on your social media. That would be fantastic. I really appreciate it. Have a great day and a wonderful fall.